Ever considered investing in stocks to grow your wealth? If not, now might be the perfect time to start. Picture this. A seed planted today, with care and time, can grow into a mighty tree. That's the power of investing. Specifically, investing in stocks can be a potent tool for wealth creation, providing the potential for your money to grow exponentially over time. It's like planting a financial seed for your future. So, what exactly is a stock, you might ask? We've got the answer. A stock, simply put, is a share in the ownership of a company. Think of it as a slice of the pie where the pie is the company. Owning stock means you have a stake in the company's success. It comes with potential benefits like dividends and the chance to profit from rising stock prices, but it's not without risks. Stock prices can fall and companies can even go bankrupt. Now that you know what stocks are, it's time to determine your financial goals. Before diving into the stock market, it's crucial to establish clear financial goals. Having a roadmap for your investments is like having a compass in the wilderness. Perhaps you're building a nest egg for retirement, or saving for a down payment on a house, or maybe you're investing to fund your child's education. These are all worthy goals that require strategic investment. Remember, your financial goals will guide your investment decisions. With clear goals in mind, it's time to understand the concept of risk tolerance and diversification. Investing in stocks involves risk, but it can be managed through diversification. Now, let's consider risk tolerance. It's a measure of how much financial risk you're comfortable taking on. Picture it as a sliding scale from conservative to aggressive. Diversification, on the other hand, is about spreading your investments across various stocks or asset classes. That way, if one stock stumbles, others can help steady your portfolio. It's like the old saying, don't put all your eggs in one basket. Having understood risk and diversification, how do you decide which stocks to invest in? Choosing the right stocks involves evaluating a company's financial health, growth potential, and industry trends. Think of it as buying a slice of a business. Would you invest in a business that's drowning in debt, or one that's financially healthy? Look for companies with consistent earnings growth. And don't forget about industry trends. A company might be doing well now, but if the industry is on a downhill, it might affect the company's future. Now, let's differentiate between long-term and short-term investing. Long-term investing involves holding stocks for years, while short-term trading aims for quick gains. The long-term investor enjoys the benefits of compound interest, dividends, and overall company growth. They weather market ups and downs, viewing dips as opportunities rather than losses. On the other hand, short-term traders seek quick profits, capitalizing on market volatility. They must be vigilant, making frequent trades based on market trends. Both strategies have their merits and challenges. Knowing the type of investor you are, it's time to understand how to use online brokerages. Online brokerages allow you to open an account and execute stock trades with ease. These platforms are user-friendly and provide a wealth of resources and tools for investors. To get started, you'll need to open an account, which usually involves providing some personal information and funding the account. From there, you can begin to execute trades, buying and selling stocks as you see fit. Be mindful of fees and commissions, as these can eat into your profits. Having a portfolio is great, but it requires regular monitoring and adjustments. Regularly reviewing your stock portfolio and making adjustments as needed is key to successful investing. This is not a set-it-and-forget-it game. You need to keep your finger on the pulse of your investments, ensuring they're still serving your financial goals and matching your risk tolerance. If they aren't, don't hesitate to make changes. This could mean rebalancing your portfolio or diversifying into new sectors. Remember, investing is a journey. It's time to take the first step and continue learning about the stock market.